The board. Let's do these major-ish moves with Josh Brown. Number one, I want to talk about the new stock that you bought. Okay?
Okay.
You tell me Encore Capital Group, ECPG, $1.5 billion market cap.
Can I just start with, please don't go buy the stock because I'm talking about it today.
You do this every time.
No,
just go.
Because I'm a good guy. Please don't just go buy it. Just like do a little bit of research. Wait 2 days. Don't buy something just because it gets mentioned on TV. Just listen to me. I have a small position. I intend to add to it. This is the biggest publicly traded debt collector in America, also operating in Europe. They've been around since the 1950s in one form or another. Basically, this is an essential part of life. You may not love debt collection, but we are going to have a very big uptick in non-performing loans, auto loans, credit card loans, you name it. It's happening, real estate related. And this is a company that thrives in an environment like that because the more portfolios of non-performing loans out there, the more money they can make. They do one of two things. Either they will purchase a portfolio of non-performing loans, pennies on the dollar, and then go run them down and work things out with the debtors, or they will get hired to service a portfolio of non-performing loans. But either way, that's the next bull market. If you think we're going into a recession, then you'd be even more bullish than I am. I'm not quite so sure that'll happen. But look at the chart. Let's throw this up. Do we have the very long-term chart, guys? Patty, where are you? Don't leave me hang. Don't leave me.
Well, you want a lifetime chart?
Girl, don't leave me hanging, Patty. All right,
they're working it out.
I'll vamp while they're doing that. This is technically one of the best-looking stocks in the market right now. What? It's not so fun.
Oh, go ahead.
This is a stock that's going up while the market is going down. Why is that the case? Well, it's because people understand that there are, unfortunately, some industries that do better when people are doing worse. And that's the reality.
Patty's trying her best, by the way. The system is down at the moment.
I can't stay mad at her. It's okay. What are we doing next?
Okay, that was it? You're done with that riff?
Yeah, and don't blindly buy stocks. Like, there's $1.5 billion market cap. So, like, let it settle. Don't go crazy. Okay, next.
All right. You sold, the first sell you have is Fedex, which you bought on June 9th.
You in that?
No.
Okay.
So about a month you're in it.
Yeah, I got out.
Why'd you get out?
I ended up being right, but I stayed too long. So I bought it going into the first shareholders meet, the first investor day that the company was holding in 10 years. I thought that would be a great catalyst. It was. The stock ran up. They announced a huge dividend increase, et cetera. And then it started rolling back over again. So I didn't want to turn a profit into a loss. I still think it's a great company. I think it's a cheap stock. But I think I kind of missed the high price. And I'm still up, so I just said, forget it. I'll revisit later.
So 3.5 weeks ago, you bought Zoom.
Yep.
And now you're out.
Same thing. I nailed it, but then it started to roll back over again. Don't want to turn a profit into a loss.
Okay.
By the way,
yeah.
I think more people should do this. If you've been listening to me this year, because I think we're in this downtrend, this bear market, when I am going into new stocks, I'm always saying, this is where I'm putting my stop loss, or this is how much I'm willing to let this thing go until I say, okay, the market says I'm wrong, I'm wrong. Not every environment does it make sense to have such tight stops, but in this environment, I think it does. So I actually think it's very productive to recognize before you buy something, is it an investment or is it a trade? What I'm doing with ECPG, I think is probably a year-long investment. When I'm going into Fedex and I'm saying, I'm gonna utilize a 10% trailing stop, or I'm going to use the 200-day moving average as a pivot point. What you're basically saying is I am willing to admit when I'm wrong here and not take a 20 or 30% loss if the overall market sells off again. And I think distinguishing between when are you an investor, when are you a trader has never been more important than it is this year.
What signal you're looking for that tells you we're coming out of the bear market? If you still think we're in one, what are you looking for?
I'll be the last to know because I'm looking at technicals. So I'll know later after it's happened. Like, I'm not going to be able to predict anything. Nobody should think that anyone can. I definitely can't. If you're relying on technicals to tell you when a downtrend has ended, by definition, you're not buying the bottom. You're coming in later.
But you're suggesting to our viewers that the technicals tell you that we're still in the bear market.
Yeah.
Okay.